Here's something you don't hear every day. Life insurance is pretty cool. Today we're gonna cover 5 things you didn't know or may not have known your life insurance can do for you. Hi, I'm Olivia Kirk.
I'm Tim Urich. We're from Tier 1 Capital, and we're here to show you how to regain control of your money.
For the best advice on controlling your cash flow, be sure to subscribe to our channel. And don't forget to hit that bell to be notified when we upload new videos twice every single week.
Did you know that there are 5 things that you can do with a whole life insurance policy that most people never thought or think of when they're thinking about life insurance? Check out our latest blog post where we do a deep dive on 5 things that you never knew that your life insurance policy can do for you. We'll see you there. Most financial advisors will tell you that life insurance is a poor investment. And we couldn't agree with them more, because life insurance is not an investment. It was not designed to be and should not be utilized as an investment. Life insurance can do so much more for you than any investment could ever dream of doing.
Not to mention, to be defined as an investment, you need to be able to lose money. And by using specially designed whole life insurance policies designed for cash accumulation, there's no risk of losing money. It's guaranteed to get better and better every single day. It's actuarially designed to do so.
In fact, the only way you could stop a life insurance policy from being worth more tomorrow than it was today is to stop it, to surrender it, to cash it in. That would be a huge mistake.
So today we're going to cover 5 things that you may or may not know your life insurance could do for you so that you will get the most out of this awesome tool in your portfolio.
The first thing your life insurance policy can do for you is to serve as a credit line. You could access that money whenever you want, for whatever you want, no questions asked. If there's a downturn in the economy, the first thing that's going to dry up for you is access to the bank's money. And wouldn't it be great to have your own credit line that you and you alone are the only one that could access that money?
When you have access to money, opportunities will find you, especially during those economic downturns, because everyone else who doesn't have access to money actually isn't going to be able to participate in the opportunities, so it wouldn't matter if they were knocking on their front door. When you have access to money, you'll be able to take advantage of opportunities and possibly earn a greater rate of return than anything else out there.
The second thing a life insurance policy can do for you is act as an emergency fund. You know, when you need to put a new roof on the house, or you need to put on 4 new tires on the car, or there's a medical or financial emergency, having access to money could actually bail you out. And that's the second key. Life insurance acting as an emergency fund so that you don't have to go put things on a credit card and pay exorbitant interest rates in order to get access to a bank or a credit company's money.
Not to mention, you're financing it yourself, basically. So you get to determine the repayment schedule. You see, with a life insurance policy loan, it's unstructured, meaning you could fit the repayment schedule into your budget instead of feeling squeezed by outside creditors or the threat of your credit going down. Another thing to consider here is that when you utilize a life insurance policy loan, as you pay down that loan, the cash value or collateral capacity within that policy increases. So the next time an emergency comes up, you already have a pool of cash that you've built that you could access again, instead of when you use a credit card, you pay off that debt as quickly as possible, all of your cash goes there, but you don't have access to money. So you're forced to borrow again, and the cycle carries on and on and on. Leave us a comment down below. What unique ways have you used your life insurance policy? Or what have you heard on the internet that you'd like us to speak about next time? We'd love to do another version of this.
The third thing a life insurance policy can do for you is help you if you have a long-term care event or a critical illness event. If you get sick or injured and you can't work, you have access to money that could help you, whether it's for a critical illness or if you have to go into a nursing home. Today, most life insurance policies at no cost offer a rider that will allow you to access the death benefit on a tax-favored basis. Now, there will be a cost if and when you access that death benefit through this rider. But here's the point. It's better to have it and not need it than to need it and not have it. So if you have a critical illness or a long-term care event, you could access the death benefit on a tax-favored basis, and that could help you to weather the storm of either one of those types of events.
The fourth way you could use your life insurance policy is to help fund college tuition for your children. Now, a lot of people don't consider this with the rise of the 529 plan in recent years. However, life insurance policies are a great place to build and accumulate wealth to save up for college. And there's one specific reason why. When you fill out that FAFSA application, the free application for federal student aid, there's no slot in there for your life insurance cash value, which is not the case for most other assets. Meaning, when you save for college in a life insurance policy, it's not going to increase your family contribution. The fifth unique use of a life insurance policy is using it as a volatility buffer, especially in those retirement years. You see, we don't know how the market's going to perform day to day, let alone when we're in retirement. But we do know that it could be very detrimental to have a double negative. A down year in the market plus withdrawing money from those accounts.
And you see, one of the great things about having life insurance to supplement your retirement income in retirement is that the life insurance cash values are not correlated to the market. So in your investment portfolio, if there's a market downturn and you're taking a distribution, that's a double negative that most portfolios cannot withstand. But if the market turns down, you can leave the money in your portfolio and take income out of your life insurance policy, and in essence, allowing your portfolio to regrow itself or to overcome the losses that were taken when the market went down. Having that extra asset or that non-correlated asset is a great complement to your overall portfolio.
If you'd like to get started with a whole life insurance policy designed for cash accumulation and your specific situation, check out our website at tier1capital.com. Feel free to schedule your free strategy session today where we could talk to you one-on-one about your specific situation. If you like this video, be sure to check out these two. We picked them out special for you.
Thanks so much for watching our video. And remember, it's not how much money you make.
It's how much money you keep that really matters. We'll see you in the next one.